AirAsia X has suffered a setback in its bid to get Bursa Securities to lift its classification as a financially distressed company. In a Bursa filing, it said Bursa rejected the medium-haul airline's application for proposed relief and PN17 upliftment. Bursa did, however, grant AAX another extension, this time until January 17th next year, to submit its regularization plan. Its latest extension is due to expire on October 28th. AAX said it would look at its options, including filing an appeal. While the reason for Bursa's rejection was not disclosed, an investment analyst believes it could be due to increased scrutiny of airlines after what happened with My Airline recently. The analyst told The Edge that the knock-on effect is Capital A having its own PN17 regularization plan knocked back, and that Capital A needs AAX to get out of PN17 first, then sell its 4 short-haul airlines to AAX to get out of its own PN17 status. At the close, AAX shares were down 7.1% at 2 ringgit 9 sen, valuing the airline at 934.4 million ringgit, while Capital A settled down 4.8% at 88.5 sen for a market value of 3.73 billion ringgit. Agriculture and Food Security Minister Datuk Sri Muhammad Sabu said the date for prices of chicken and eggs to be floated in the market is expected to be announced on October 30th. According to a report by Bernama Newswire, the minister said discussions and meetings are being held with the stakeholders and industry players who are involved in production to ensure prices remain at reasonable rates. He said he would be unable to say how long the food staple would be floated, as it would depend on the situation. Prime Minister Datuk Sri Anwar Ibrahim, when tabling Budget 2024 last week, announced that the temporary price controls for eggs and chicken would be lifted, as current trends indicated that the supply of both is now stable. Anwar said the move would enable the local market to function freely in ensuring sufficient supply of both products. The ringgit fell to its lowest level against the US dollar since the 1998 Asian financial crisis, weighed by the greenback's rise and a widening rates differential with the US. A Bloomberg report noted the currency fell to as low as 4.7703 per dollar. It is the worst performer in Asia this year after the yen. The latest bouts of losses come as the dollar gains amid concerns over the Israel-Hamas war, while Malaysia booked a 13.7% fall in exports in September, its 7th straight month of decline. This was partly due to a slowdown in China. Meanwhile, Bank Negara's decision to pause interest rate hikes is also adding headwinds for the currency. Quoting Mizuho Bank Head of Economics and Strategy Vishnu Bharatan, the report said the ringgit's underperformance has been due to real rate spreads that could turn a lot more unfavorable, especially as the subsidy rollback hits inflation and reveals softer real policy rates. He added that policymakers face a trade-off between economic headwinds from higher rates or the risk of not responding and endangering macro and ringgit stability. PNB has exercised its put option to dispose of all its shares in Maybank Asset Management Group or MAMG to Maybank for a cash consideration of 70.39 million ringgit in a related party transaction. According to Maybank's filing with Bursa Malaysia, its acquisition represents a 20% stake or 8.34 million shares, and upon completion, MAMG will be its wholly owned subsidiary. PwC Capital, which was jointly appointed by the two parties, determined the fair value to be 70.39 million ringgit. The banking group said that the purchase consideration will be satisfied in cash and funded by internally generated funds. The proposed acquisition is expected to be completed by the 4th quarter of this year. Notably, Amanah Saham Bumiputra, a PNB-managed fund, is the major shareholder of Maybank with a 31.03% stake. Shares in Maybank closed 0.11% higher at 8 ringgit 96 sen, giving it a market capitalization of 108.06 billion ringgit. MITI Minister Tengku Datuk Sri Zafrul Abdul Aziz said approved permits for imported completely built-up cars remain relevant and essential for protecting and supporting the development of the national automotive industry. He explained that the primary purpose of the government's use of APs to import cars, including electric vehicles, is to monitor and support the automotive industry in Malaysia. This is in line with the National Automotive Policy 2020, which aims to establish Malaysia as a hub for energy-efficient vehicles. He said the AP mechanism also promotes inclusive growth within the automotive industry, as it encourages the involvement of Bumiputra entrepreneurs in the automotive supply chain. The minister added abolishing APs for CBU cars would risk non-standard vehicles being dumped here, posing risks to users. The current mechanism, he said, means imported CBU vehicles are subject to his ministry's rules and regulations, such as Bumiputra equity and minimum paid-up capital requirements.